back to another video, and let's go ahead and talk about accumulation cycles. How can we identify them, and most importantly, what kind of trade setups could we get in that particular weekly accumulation cycle? So let's take a look at this pound JPY, and let's break down this week as I would see it here. Let's go ahead and start this out. So we're looking at the previous week, which is the first thing that we should look at, and you can see we basically had what, a trending cycle, right? Let's go ahead and play this out knowing that we had a trending cycle, okay? And let's take a look. Asian session, we got 142 pip range. Okay, huge range, obviously, right? So let's see, now that we know what the range is, all right, we can see basically the bigger EMAs, the 200 here, and then also obviously the 50s riding right in the middle along with price. Now, obviously we see that price is moving basically outside of the Asian box in the middle of the range, right? So it's moving outside of the box in the middle of the range. So that inherently tells us what automatically? That we're going to have to wait essentially for price to either go to the top or go to the bottom, right? To get us either type 3, type 2, whatever it is. Okay, so because it's coming out of the middle, we already have that kind of that sense of expectation of we need this price to come down or come up to the top, and then provide us with some kind of a setup. Okay, now as this goes along here and we go into the London session, you can see basically where price is just basically literally moving just sideways, right? It's not doing anything. It's just collecting contracts, collecting contracts. So it's not doing anything as of yet, okay? So we don't have anything to trade essentially. Now you essentially see how the 200 is basically blocking price from moving straight down to the bottom of the range. Very likely, guys, because of this type of behavior and because of the EMA being here, that we're not going to get price to come back down, okay, to the bottom of the range to get a setup. So this very likely could be a situation essentially where we might not get a setup during London, or if we do get if this price does move up, essentially it's not going to give us potentially a setup that we can actually take that's like within our rules, right? So it might be like a setup where you would basically get this moving sideways out the middle, and then it just goes in one direction. Okay, so expect that kind of behavior depending on what you look at during the Asian range and most importantly during London. All right, so you see how price basically is broken past above basically that barrier right there. You see how that's broken outside of that? Okay, so that's a pretty good indication if we get another candle here that potentially this is going to go go up higher if we break free past this. Yeah, so there you go. So now we get into the US session, right? So this really didn't provide any kind of a setup. Once you get more experience with this, right, you'll understand the behavior that's happening here, and you might not be scared to take this trade up. Okay, but let's see what happens here in the New York session. See if we get any kind of a setup. You can potentially see that we have essentially like an M. We have the first leg here and the second leg basically here. Okay, now you can see on this particular candle, we've gone ahead and we've closed below the 13, right? So we could potentially have a situation where we have a trade coming down, okay, because we're basically like tapping close to these highs up here from the previous week. Okay, you see if we go like basically candle to candle, we're pretty close to that. Let's say, what's the risk versus the reward of taking a trade like that? 44 pips of risk basically to get 55, let's say, just to get to the middle of the range, right? So basically like a 1-to-1 risk to reward ratio. Is that essentially worth the risk? Is it really worth the risk? I don't think it is, because a 1-to-1 risk to reward ratio, 44 pips, even if you bring down, look, even if you come down to above that candle, you're still at 30 pips. Okay, 30 pips. So I know that with JPY pairs, you're going to have to incur a little bit more of a risk. So like, let's say instead of 15, you're looking at 20, 25, right? So with this one, you're looking at 29. So if you're thinking about possibly taking this trade, ideally you would want to get a pullback, to get basically a better entry, right? So if we can get a pullback like maybe half up the candle like here, then we can possibly lower it to 18. Now we're looking for a way better trade. And now we're looking from a 3 to, we go from a 1 to 1 to a 3 to 1, right? So huge difference basically in that. So we got a little bit of a pullback, but not, nothing significantly enough essentially to get us into that particular type of trade. So even if we were to get into this trade, okay, at the very tip of this pullback here, you're still looking at about a 25 pips, about your max, of what you could potentially get from here. So, you're looking at a 2 to 1 risk reward ratio now with that little pullback. Okay, but you have to have a really tight stop loss here on the top of that candle. So let's see if that's going to be even worth it. Okay. Okay, so that played out in your favor, which is great, but you can see essentially how you would have to basically take this trade all the way up here in that pullback. That pullback is huge because it basically makes it from a very not likely trade to a very possible trade. Okay, and if you're waiting for the crossover, which is on this candle here, basically your pullback would be like right here on this next candle, and let's see, your entry would have been somewhere around right there, and your risk is still about 24 pips anyways. But the problem is now you go basically to a 42 pip. It's close to a 2 to 1. It's 1.75 to 1. Okay, unless you basically literally lower your risk substantially, and then you run the risk pretty much of getting stopped out because of the spread. Okay, depending on your broker. All right, so that's one example here, but this is only on Sunday, Monday. All right, so let's take a look and see how this plays out for the rest of the week here. So we're going into Tuesday now. So Tuesday is going to be very important. All right, so you can see here that essentially what did we do Sunday, Monday? In reality, all we did Sunday, Monday was here. Look, we moved down, back up. We basically moved sideways, right? Is all we did on Sunday, Monday. So now basically we have price trading between a high and a low. Okay, so depending on what actually happens on Tuesday will help us determine what kind of a cycle we're going to be in. Okay, so as we move this along, and we can see already that 109 pip Asian range, this was back in March, so this is when the coronavirus thing was going on, so obviously you're going to have huge Asian ranges. So, but still, we get the same situation. We're moving out inside the middle of the range, so possibly not the best ideal, and you can see how tight the 50 and the 200 are. So essentially we may get something just like this again. Yeah, you can see we move down, we're literally right there, and we're just basically moving sideways. Same thing. We just had a crossover right here, and then you can see basically the high is right there of this little kind of this little area that we're working with. Okay, so there's the breakout right there. Can we get essentially a pullback to help us get into a trade? Okay, if you're going to trade this. And the only reason this becomes even relevant of a trade is because we know the behavior, because we already saw it the previous day. We saw that it basically the 200 prevented price from going all the way down. And this is doing the exact same thing. Now, because we know that we're in this range, right? We're looking for, a trade back up to here, which is about 70 pips away. Okay, so 70 pips. So the profits potential is there. Okay, the profit potential is there. We just need to get a good entry. Okay, so if we can get a pullback here in this area, we could go long, and our long would probably go up to here. So if we can get basically a pullback, we can use the 200 as our stop loss here. So let's see what happens. Okay, right there. We can use that pullback right here. Okay, and we're at about a 27 pip. We're still at a 2-to-1 risk to reward ratio though, because our target would be the high of yesterday. That one made it to the high. Okay, so that would have taken us out of the trade. Let's take profit. That's 70 pips right there. So now we're 9:15. We're not even open for the U.S. session yet officially. And then let's see what we have. Okay, do you see this right here? Look at this right here. Look at what's happening. Do you see how it keeps spiking to the high of yesterday? Spike, 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 spike. You see that behavior? That behavior is an indication of a possible M here. Okay? Possible M here. Also, on this previous trade, look at the TDI. Do you see how we made basically a multi-session W here from first leg, second leg? You see that? Right here to right here. And then we were moving up higher and higher. By the time our entry was, look, we were already up here on the TDI. So again, good indication of confirmation there. So now, essentially, what we're looking for is on the TDI. Can we look for an entry right here? Let's see. No. Boom. You see that? Look, it went up and then spiked really hard. Boom, look at that. Damn, that would have been a nice candle. That's too big though. Is there a pullback at all that happens? Yes, yes. Look at that pullback right here. This is the cross that happens, okay? And then here we have a pullback. If we take it, let's just say down to the middle of the range where the 200 is, right? Make it something that's easy to essentially obtain. We're looking at about 50 pip range. Look at the TDI. It's already down here close to the 50. All right, so we know we're definitely moving lower on the TDI. As far as the stop loss go, you can put it probably above this candle here, and you're still about 20 pips. So you're about 2.5 to 1 risk to reward ratio. Almost, I don't know. This could have possibly stopped us out on that candle there, depending on how big the spread was at that time. But let's see what happens. Okay, so it does get to take profit, but we just don't know depending on how big that spread was. But you can see, again, if you would have used, 25, which is your max, I think you would have been just fine, But it pinned right back up to the high. You see that? To the high of that candle. So depending on where your stop loss is, whether it's 20 pips, 25 pips, also the spread, that's another thing to consider as well. But you can see essentially the pattern was there, the timing of it was there, and even the pullback was there, and you still got over 2-to-1 risk to reward ratio. Okay, so now because of what happened on Tuesday, what does this look like? Looks like we're coming from a trending cycle into what? An accumulation cycle, right? Because we're basically doing support and resistance. Okay, so let's pass forward to the Wednesday and let's take a look. All right, so here's Wednesday. Okay, so Wednesday, this is pretty interesting. So 71 pip Asian range, and now basically we moved during the Asian range straight down a little bit below where the low of essentially the week is so far, right? So let's see if essentially does this play a part where basically we're moving across this line, or do we move further down and basically come off and bounce off the 800? And let's see what we could potentially get here off of that. All right, so here potentially we're looking at what? At type 1, type 2 setup, because it's right below on the right below the bottom here of the low of the Asia range. So we're about 30 pips or so. So I would call that a type 1 setup. First leg is down here. Second leg is here. Okay, here's the close above. We still haven't crossed yet. Let's see if we get a pullback. There's a pullback right there. We still don't have the cross though. So if you're an aggressive trader, that might be, a no-no for you just yet. But if you keep getting these pullbacks, you see these wick candles that keep happening. So all these candles here could be used, if you're an aggressive trader, could be used essentially as an entry. Okay. Now, what would be essentially the setup, even if you were thinking about entering a trade like this, right? So, I mean, you'd be looking at, let's say, a 13 pip, stop loss, and then I don't know. I would probably say the safe thing to do would probably be go to the 50, because it's going to the 50 and then the middle of the range, and then obviously the second target would be around the 200 EMA. But if we can get to the 50, that still gives us 35 pips. So this is still a 2 to 1, almost a 3 to 1 risk to reward ratio if we use these pullbacks. If we use the pullbacks to our advantage here to get into a trade, then we could potentially have still over a 2 to 1 risk to reward ratio. So as we play this out, look at the TDI as well. It's already moving past above the yellow line. Oh man, look at that. We got stopped out there. Damn. Okay. There's a crossover there. There's a pullback. All right. So here's a lesson, right? Is this could happen, right? You can get basically stopped out early. This is the risk that you take by becoming aggressive. By being an aggressive trader, meaning not waiting for the crossover to happen in a pullback. If you just wait for the 13 to crossover in a pullback, this is something that could happen. You could get wicked. You basically get wicked, right, and taken out of the trade. Okay, and taken out. Right. The only thing that you could possibly do to avoid it is basically move your stop loss down further than 13 pips. But now, instead of a 2 to 1, 3 to 1 risk to reward ratio, now basically it becomes a trade really that's not in your favor. You know what I mean? So that's very important. And then now, essentially you're looking at a trade really that's not even, it's not even possible, because you're only talking about 22 pips. You're risking about 15, even on a conservative, stop loss. So this is not worth taking, essentially, if you got stopped out here on the aggressive trade. If you're a conservative trader, right, this essentially could not be a setup for you, because the risk is to reward is just not there. It would that risk to reward would basically keep you out of the trade. Okay, so let's play this out. All right, so here we are essentially in the opening of the New York session. All right, we're not at the low. How many pips are we from the low here? From the low of the day so far, we're about 40 pips from the low. So obviously we're not trading off the low. And then off the high of the day so far, we're about 32 pips. So ideally, we're like in the middle, right? We're essentially like in the middle. So this potentially gives us an opportunity to go long and have a continuation trade of this. So essentially it would be like a trade like this, right? So what is the risk to reward ratio on something like this if we were to take a trade like this? So a 20 pip stop loss, and then we would have to go to the 200 to make it worthwhile. So about 40 pips. It's literally right there at 2 to 1 risk to reward ratio. Okay, so let's see what happens and see if this is a continuation trade that we can potentially take, and let's see if this works out for us. Looks like right here, this pinned all the way back up and went past it. So this would have hit take profit. So 40 pips on a 2 to 1 risk to reward ratio, basically like a continuation trade. You would have taken it like a continuation trade. So let's move on to Thursday here. And we're still thinking it's a accumulation cycle, because we're basically still trading within this, the support and resistance that was built from Sunday, Monday. So we're still in that type of cycle, right? So essentially, we depending on what happens here for the next day, let's see. Okay, so I mean, really, you can see we'd still be looking for what? We'd still be looking for buys, right, for Thursday. Now, as we come out of the Asian session here, 58 pip Asian range, okay, we've already hit the top of the range. You can see now that the 200 is going straight through price, right? And you see the 50 is now below it, all right? So let's see what happens. Okay, so this behavior right here is what we saw, basically what we saw Sunday, Monday, but it's happening. It actually went from the top and it went to the middle. So the only real trade I think that you can get out of it, if we're looking for buys, is a type 3 setup. Boom, look at that. That right there would have been a nice entry candle right here. So I think this right here would be 27 pips. Good Lord. That's way too much. Let me see. So to get to yesterday's high, 55 pips, 2-to-1 risk to reward ratio, 27 pips. 2-to-1 risk to reward ratio. Let's see if we can get there or not. So we made it there. Wow, look at that. That's amazing. Okay, so what happens for the US session here? So for the US session open, we're like already, we're not, definitely not at the top, obviously. We're, you know, nowhere near the middle of the range here. So that was a pretty aggressive candle there. Let's see what happens. Oh, straight down. Wow. Okay. Ooh, straight up. Look at this right here. Damn, we missed it. W here, W here. But there was really, man, that's not really an entry because the 13 is way too far away. So that would not have been an entry. Okay, so we got just one trade out of that. All right, let's go to Friday here and let's take a look. All right, so essentially, look, we know that we're in a, what kind of a cycle? Accumulation cycle. We know that because we've been working between the high and the low of the week so far. So we're pretty much close to the top. All right, so depending on, and Friday's one of those days that I keep saying that, you know, it doesn't always work out to where how you want it to work out, because obviously Friday they use it a lot to set up for the next week. So unless the pattern is really good, then essentially we won't trade on Friday. But let's see what happens here during this Asian range. Okay, so 43 pip Asian range. All right, and we basically have a situation now where, again, the EMAs are going to play a part, because it's the EMAs are basically one above, one below. So you're probably going to look at a squeeze, essentially, is what's going to happen. Okay, it's going to have a squeeze out of this. Yeah, see, you see that big candle right there, that big wick? There's a reason that wicked all the way up there. Okay, so essentially this tells us, okay, that potentially market makers don't want to go higher. They want to go actually lower. Okay, because there's no reason why would you wick and then wick 2 bars in a row like this. Let's see what happens here. Yeah, see that? Let's see. Boom. Hey, see that again? Wicks, that 50 right here is going to keep this from not reaching the middle of the range. So I would definitely be looking more for sells than buys because of this behavior. I almost feel like there's a breakout that's going to happen because these two EMAs are basically going to squeeze price out of it. You know, so essentially I would want to have price basically break this structure right here and break. And so if it breaks that structure, then potentially we could be looking at a situation where we could get, you know, a trade set up essentially on that particular day, or for this day here. Okay, so let's see. Yeah, so that candle right there is probably going to do it. So let's see, 31 pip. That's way too much. You'd have to put it up right above that candle there, which is what, 20 pips. And then where the hell do we take this? The first real point really is, damn, all the way down here to the 800. I don't know if we'll actually get there or not. That's pretty far away. It's like 70 pips away. So how about we mark it first 30, and then we'll just see what happens here. So if we get to 30, we're basically looking at not a 2-to-1 risk to reward ratio. So we're going to have to go all the way to what? To 42 pips to get this trade. So let's see what happens. Ooh, we hit it. Nice. Almost just in place. All right, so we hit that. All right, so we're opening the U.S. session. And essentially, what do we have? We're basically a good distance away from the low of the day, supposedly right now, about 46 pips. We're definitely way, away from the high of the day. So we're kind of in the middle, right? So we could potentially see a continuation trade here for the New York session. So let's take a look and let's see what we get here. Hopefully we can get some type of a setup. Okay, there's that pin bar there. Oh, there it is. My goodness. Yep, that was it right there. That pullback isn't going to help at all. That's way too far, obviously. Okay, so we had all the way, look, we had a pin all the way back up. I mean, at this point, I don't think that there's going to be a trade set up here. Even though it's 9:30, we pinned the 50 and the 200. Okay. I don't know. I don't think if this was going to be something that goes short, 23 pip, let's see, to the 800, 50 pips, 2-1. The setup, I'll tell you, the setup doesn't look the best, but let's see what happens. Wow, it actually, damn, just made it. Look at that. So it did make it, look, it didn't make it all the way down to yesterday's low. How about that? So that would have been another trade there, but it was really just really messy. Really the ideal would have been to get in super early here, but you would have had to get in like crazy early, like back here, like on this candle right here, the very beginning, but that candle I think might have given you like, I don't know about that, but regardless, you saw what happened. Okay, so we basically had an accumulation. Okay, we had an accumulation cycle that week, and we ended up hitting 1, 2, 3, 4, 5, 6 trades. 6 trades, and we lost one of them where we got stopped out at, right? So 6 trades on an accumulation cycle. That's pretty big, actually. That's a lot. Normally you don't get that many. Maybe get 3 or 4 at the most. But you saw, guys, the important thing is you see the entire process of the thinking that literally I go through. This is me talking to myself the entire week. This is the thought process that I go through the entire week of doing this. Okay? I hope this really helps you out in understanding the process that I go through with looking at these charts and looking at the weekly analysis and kind of the thought process that goes through with the behaviors and everything like that. All right, guys? Hey, guys, what's up? Just wanted to make a quick video. If you've ever thought about joining our mentoring program, this is the time to do it. For this week only. It's Black Friday week in the US, so we're going to go ahead and promote a 50% off for this week only off of the entire mentorship program. All right, this will never happen again. So this is the time. If you've always wanted to join the mentoring program, which is a lifetime membership, this would be the time. The links are in the video description, guys. I hope to see you in the mentoring program.